Tips to become a better mutual funds investor. Investing in mutual funds can be a good way to diversify your portfolio and potentially earn a return on your investment. Here are some tips to become a better mutual fund investor. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Understand your goals and risk tolerance. Before investing in any mutual fund, identify your financial goals and risk tolerance. These factors will influence the type of mutual fund that is appropriate for you. Diversify. While mutual funds themselves are a way to diversify, you should also diversify among different types of mutual funds. Include a mix of equity funds, bond funds, and money market funds based on your risk tolerance and investment horizon. Research before investing. Don't just invest in a mutual fund because someone suggested it. Do your homework. Understand the fund strategy. Look at the past performance. But remember that past performance is not indicative of future results. And check the expenses and fees associated with the fund. Watch the expense ratio. Mutual funds charge a fee for managing your money, which is expressed as an expense ratio. A high expense ratio can significantly eat into your returns over time. Look for funds with low expense ratios. The expense ratio is a measure of what it costs an investment company to operate a mutual fund, and it's expressed as a percentage of the fund's assets. It includes things like management fees, administrative costs, operating costs, and other asset-based costs incurred by the fund. The expense ratio is deducted from the fund's assets, which means it reduces the fund's overall return to investors. Avoid chasing returns. It's common for investors to be attracted to mutual funds delivering high returns. However, funds that have done exceptionally well in the recent past don't always continue to do so in the future. A well-diversified portfolio with a long-term perspective is a better strategy. Regular investments. Consider setting up a systematic investment plan, SIP. And SIP allows you to invest a fixed amount regularly, irrespective of the fund's net asset value (NAV), which aids in rupee cost averaging and disciplined investing. Review regularly. Regularly review your mutual funds to ensure they are performing as per your expectations and adjust as necessary. This doesn't mean frequent trading, but rather a periodic assessment of your portfolio. Long-term perspective. Mutual funds generally perform best over the long term. Have patience and give your investments time to grow. Seek professional advice. If you're unsure about where to invest, don't hesitate to seek advice from a financial advisor. They can provide you with personalized advice that aligns with your financial goals. Remember, investing in mutual funds should be done with a clear understanding of your financial goals, time horizon, and risk tolerance. It's important to stay informed and make educated decisions. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comments section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.